The Dow Jones falls over 600 points in its worst day this year as rate jitters offset enthusiasm around Nvidia's blockbuster earnings. Treasury yields climb on positive economic and labor data. The dollar index climbs to 105. Markets in the Asia-Pacific open weak on the back foot following a weak handover from Wall Street. Inflation in Japan eases to 2.5% in April. The GIFT Nifty is also implying a weak start for the Indian market after a record close on Thursday. Oil prices fall for the fourth straight session with Brent hovering around levels of $81 a barrel. Gold price is down to a one-week low dragged by a hawkish Fed and US economic data. India's largest airline, Indigo, records the sixth straight quarterly profit. Revenue from operations grow to over 17,800 crore rupees and margins rise to a healthy 24.8%. The airline also announces a foray into business class on select routes by the end of this year. And Hindalco and NTPC will be the two important index names reporting their fourth quarter results today. From the broader markets, numbers from Ashok Leyland, United Spirits and Manappuram Finance will be in focus. It's a Friday morning and we are back here with Power Breakfast on CNBC TV 18 in the Mumbai News Centre. I am Hormas Fatakia. Let's first take a look at how the Asian markets have opened this morning, and it's a weak start on expected lines considering how Wall Street ended last night. The Seng index has recovered some of the losses but still continues to trade lower by around 0.2%. The Taiwanese index is also down 0.3%. The Seng though is shed almost 5% this week, and it has been one of the biggest underperformers this week among the Asia Pacific indices. The Japanese indices and the South Korean indices, the Nikkei and the Kospi, are also trading with losses of close to 1%. Pull up the GIFT Nifty as well, and that will give you an idea of how the Indian markets are likely to open. A slightly negative start after the 350-point rally we saw on the Nifty yesterday. So a 40-point implied open, which is a downtick of 40 points, is what the GIFT Nifty is suggesting, and we'll know how the markets open at 9:15. But from Asia, we move to Wall Street, where rate jitters have offset the enthusiasm around Nvidia's blockbuster first quarter results. And let's stocks on Wall Street lower in the overnight session. The Dow Jones fell over 600 points in its worst day of 2024, and the S&P 500 also lost 40 points, while the tech-heavy Nasdaq closed about 65 points lower. CNBC's Julia Burstein gets us a wrap of all the action on Wall Street.
Markets fell on Wednesday as a post-earnings rally from AI chipmaker Nvidia failed to lift the broader index. The 30-stock Dow was down more than 600 points on outsized drops from a few stocks, including Boeing, McDonald's, Salesforce, and Caterpillar. The S&P 500 fell by 39 points, and the tech-heavy Nasdaq lost 66. Both reached record highs earlier in the day. 30 states joined the Justice Department today to sue Ticketmaster parent Live Nation over alleged antitrust violations. The legal action follows a DOJ investigation launched in 2022, with interest bolstered by fan complaints over issues securing tickets to Taylor Swift's Eras Tour. The lawsuit accuses Live Nation of relying on anti-competitive conduct to control the live events industry in the U.S. at the cost of fans, artists, smaller promoters, and venue operators. Live Nation called the allegations absurd. Sales of newly built homes tanked in April as home prices and interest rates rise. The U.S. Census said on Thursday that new home sales dropped about 5% from March to April and fell 7.7% from the year before. The monthly reading is based on signed contracts, so it reflects people inking deals based on April's 7.5% interest rates. Earlier in the week, new data showed that sales of previously owned homes also fell in April. That's what's happening here in the U.S. Back to you in Mumbai.
On to some important opinion now, and JP Morgan Chase CEO Jamie Dimon says he doesn't believe the world is prepared for higher interest rates and continues to remain on the cautious side of things regarding inflation, the Fed's rate path, and a lot more. He spoke to CNBC on the sidelines of the JP Morgan Global China Summit. Listen in.
When we look at risk and rates, we don't always look at guessing what the future is, kind of look in the range of outcomes. Do I think that rates can go up a little bit? Yes, I do. And if they do, is the world prepared for it? Not really. Okay, so I think, could inflation be stickier than people think? I think the odds are higher than other people think, mostly because the huge amount of fiscal and monetary stimulus is still in the system, and it's still maybe driving some of this liquidity you see, markets going up, prices of certain assets, stuff like that. So I'm just in the cautious side. Now again, I'm usually cautious, so maybe that's my normal state of affairs, but put me in the cautious side in this one. The world said it was going to stay at 2% all that time. Then they said it was going to 6%. Then they said it's going to go to 4%. It's been 100% wrong almost every single time. Why do you think this time it's right? So I look at the range of outcomes. And again, the worst outcome for all of us is what I call stagflation. Higher rates, a recession, that means corporate profits will go down. And we'll get through all of that. I mean, the world will survive that. But I just think the odds are a little bit higher than other people think.
Jamie Dimon there speaking to CNBC. Let's now listen into some more important opinion coming in from a whole host of experts on U.S. equities, the inflation trajectory, and the Fed's potential policy path. Listen in.
I think, certainly we also think the bar for a rate hike is pretty high. But since the May 1st meeting and since the Fed meetings came out, we've seen a slew of data points that actually have been, we think, supportive. So we certainly saw our first inflation print that came in on the better side. It was cooler than expected, or at least in line. But we also saw a labor market that looks like it was softening. Retail sales were below expectations. And we had a bunch of retail names, Target, Walmart, Starbucks, McDonald's, all kind of telling us that the consumer may be pulling back a bit. So this story of this Goldilocks cooling in the economy and inflation may be moderating, we think will be playing out in the back half of this year. The Goldilocks scenario is still a base case, but probably one of the bigger tail risks now is, do we go more quickly into something deeper or more prolonged in the economy? And certainly what we're watching is, one, the labor market. So we have seen unemployment rates still 3.8, 3.9%, near multi-decade lows. But if you look at things like job openings moving lower, the quits rate moving lower, so those are leading indicators of the labor economy. They are pointing to softening ahead. When we look at the consumer, not only retail sales, we're of course looking at things like credit card debt levels elevated, some signs that delinquencies are picking up as well. All of those signals still coming from the lower end consumer, so not much of a broadening out to the broader economy, broader consumer. But we'd say more broadly is we haven't seen red flags yet. I think all of those are yellow flags, but we're watching those signals carefully. We are watching the unemployment rate to see if it ticks up much beyond 4%. We don't see that yet. So we continue to see this base case of a moderation to trend or maybe slightly below trend economic growth. But by the way, that's good for inflation as well.
I think there's still a possibility that policymakers may adopt the onset of the easing cycle in July. The reason behind this view is that essentially you still have disinflation momentum in the pipeline. You have easing final demand growth. We're seeing consumers being a little bit more cautious with their outlays. You have an environment in which wage growth is moderating. You have an environment in which there's still further rent disinflation to come through. And then you have stronger productivity growth. You combine all those elements, and that's still disinflationary. We're not too far from 2.5% when you look at PCE gauges. Both headline and core are moving in that direction. I think that will be a signal for the Fed to start considering easing monetary policy very gradually, very cautiously, but I still think that a July onset is a possibility.
And that's all we have with our global market update. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Sudarshan joins in to get all the market cues that you need to watch out for today. Sudarshan, good morning. A record rally yesterday, but what's the setup looking like today?
Morning, Harma. So, we'll have to see if we manage to or build on to yesterday's gains or take a pause considering a muted handover from global market. But first, talking about yesterday's session, as you mentioned in your trade setup, we were so near yet so far from this psychological level of 23,000. Nevertheless, it was a record day of trade with 3 or 4 frontline indices hitting record highs. And if RBI dividend was not enough, FIs came in to buy into Indian market. Yesterday's buy figure of more than rupees 4,600 crore by FIs was highest in almost 3 months, and it's the only second time this month that FIs have bought into cash market in the Indian market. And so where exactly FIs have done buying? It was a broad-based buying with all the major names from Adanis to autos to ITs have gains almost somewhere in the range of 3 to 8%. But the biggest contribution came from financial heavyweights like HDFC Bank, ICICI Bank and Axis Bank. But despite the record day, market breadth was in favor of declines, and the reason was relative underperformance by mid-caps. Mid-cap index had closed with a gain of 0.5% against 2% each by other indices like Nifty and Nifty Bank. So what is next? Will we manage to extend the rally? it looks unlikely, at least for today. Yesterday, we were expecting a strong move in US market after strong earnings and healthy outlook by Nvidia, but it was offset by rise in yields. US 10-year yield is now back near to 4.5%, and rate-sensitive yield, that is 2-year yield, has risen 6 basis points to almost 5%. Even initial jobless claims have fallen less than expected, which indicates that US economy remains on a strong footing and hope of rate cuts might only get postponed. And with this, GIFT Nifty is indicating a start in the red. And lastly, in the results today from Nifty, we have NTPC and Hindalco, and other major earnings are Ashok Leyland, Torrent Pharma and United Spirits.
So close yet so far. Very pertinently put there by Sudarshan. Thanks a lot for that. Now over to Vamakshi, who would list out the stocks to watch out for in today's session. Vamakshi, good morning.
Well, good morning, Hormaz. Let me first start off with the earnings then. A good set of numbers came in from Indigo. Capacity as well as passengers saw an uptick of almost 14%, which in turn drove a nearly 26% rise in the revenues. The EBITDA margin has also risen to 24.8%, and resultantly, the net profit has almost doubled to 1,894 odd crores. JK Lakshmi Cement also reported good set. Revenue was down by 4.5% nearly, but the margins have improved substantially to 18.9%. The net profit has come in nearly 41% higher. Fortis Healthcare revenue saw an uptick of 8.7%, margins have expanded to 21.3%, and net profit has come in nearly 35% higher. Shilpa Medicare also good set coming in from this counter, revenue seeing an uptick of almost 5.1%. The margins have improved substantially to 58.1%, and the net profit is of nearly 25 crores versus a loss of almost 8 crores is what the company has reported this time around. But on the other hand, we have a weak set of numbers coming in from Schneider. Revenue was up for 15%. The EBITDA also was up nearly 20%. Margins have improved, but the net profit, that is seeing a very sharp downtick of almost 93%, and that is mainly on account of provisions being made for ongoing income tax matters. Orchid Pharma is the next counter we will be focusing on. Revenue seeing an uptick of almost 3.5%. The margins have declined substantially to 13.3%, and the net profit is nearly 49% lower. Sun Pharma, lastly, let's also focus on this stock because the merger agreement between Taro and Sun Pharma has been approved by the shareholders, and the EGM was held on May 22nd.
Vamakshi, thanks a lot for that. Now over to Nigel, who would list out the FNOQs for the morning. Nigel, we almost made it to 23,000 yesterday, but fell short, as has always been the case. What's the FNOQ looking like this morning?
Well, Hormuz, it's ironic, right? We're talking about such a big rally that we saw yesterday. And if you asked most investors, they'll say, my portfolio didn't look so good because it was a large cap driven day yesterday. The Nifty and the Nifty Bank did very, very well. But the mid caps and small caps, they didn't really participate after the kind of rally that we've seen. What took place? On the Nifty, there was some long addition that was seen. But on the Nifty Bank, there were signs with the way it burst away, that there were signs of short covering, and that's precisely what's happened. And that, in fact, perfectly tallies with what the FIs did. They covered close to around 30,000 short contracts, and they added close to around 86,000 long contracts. So the swing factor in a matter of day is more than 1 lakh contracts. And the short positions that were at around 70, 72% just a few sessions ago, that's come down to around 58%. But that's the bar that's telling you the picture. The short positions, net short positions, halve in a single trading session. So, on a like-to-like basis, if you're comparing it with the previous contract, then it's at around a net short of around 50,000 contracts. As of the current lot size, it's at around 1 lakh contracts. So, they're still net short, but a big part of that short covering did take place in yesterday's trading session. Now, 2 strikes I'm looking at. There was put writing that we saw in yesterday's trading session. 28,000, 22,800 put, 22,700 put. Well, both of them fair bit of open interest build up. Close to around 65 lakh shares getting added out there. The premium between 70 to around 90 rupees approximately. And because we saw put writing, the PCR is moving up now. Remember, a few sessions ago, it was at around 1.1. It's moved to around 1.37, but it normally peaks out at around 1.6. So just keep that in mind. 11s to track, going by the options data, 22,700, 22,750, because the previous resistance zone was this. Now that becomes a bit of a support zone. And the Nifty Bank levels as well come up for you on the screen. 20 DMA on the downside, fresh all-time highs on the upside. 2 stocks came out of the FNO band, so I'll keep an eye out on that. Biocon as well as Idea. Some action on those could be warranted. Back to you.
Vodafone Idea will definitely be in focus for multiple triggers today. Thanks a lot, Nigel, for that. Time for a short break on Power Breakfast. When we return, India's largest airline, Indigo's profit doubled in the 4th quarter. We get you more on that on the other side. Stay tuned. Back soon. Back with us on Power Breakfast, on to some earnings now. Interglobe Aviation has reported a good set of earnings in the fourth quarter, beating estimates on all fronts. Net profit has more than doubled to 1,894 crore rupees compared to 919 crores in the same quarter last year. Now, this is the sixth consecutive profitable quarter for India's largest airline. Now, the profit growth was aided by other income, which grew by 55% from last year, and by tax credit. Now, revenue from operations also increased 26% on an annual basis to over 17,800 crore rupees against 14,160 crores in the fourth quarter of last year. The number of passengers using the airline also climbed 14% year on year, with the increase at 26.7 million. Now, in their earnings conference call, the company's CEO Peter Elbers said that the airline would soon offer business class seats to passengers who wanted a premium experience.
We are taking the next step in the evolution of IndiGo. We will be launching a tailor-made business product on the busiest routes and business routes of the country before the end of this year. There's an ever-growing need for premium travel in India, and by launching this product, we will create a desired option for many who are aiming to travel business, and perhaps for some of them for the first time in their lives. Our current pending order book of a little short of 1,000 aircraft to be delivered up to 2035 gives us long-term visibility well into the next decade. For the many years to come, we will receive a minimum of one new plane every week. And this speaks a lot about India probably being the last frontier of aviation growth of such a high magnitude, and the part IndiGo is poised to play in it. With our target of 600 plus fleet aircraft by the end of the decade in mind, we continue to develop and align people, processes and technology in line with the growing size and the scale of IndiGo.
Some good news there for travelers and shareholders of IndiGo alike, but there is also some good news for pilots of Air India. The airline has announced a salary hike as well as an annual bonus for its cockpit crew. Madiha Mujawar joins in with all the details. Madiha, how much more money will these pilots get in their account?
Well, the salary increase is quite minimal considering the paychecks pilots draw. According to Air India's letter sent to pilots, there's no hike for junior first officers. First officer and captains will get an increase of 5,000 per month, commanders to get an increase of 11,000 per month, and senior commanders to get a hike of 15,000 per month. Coming to the bonus part now, pilots will get an annual target performance bonus, which means only those pilots who meet the target metrics set by the airline will be eligible for this bonus. So a junior first officer will get 42,000 per annum, a first officer will get 50,000 per annum, captain will get 60,000, commander to get 1.32 lakh, and senior commander will get 1.8 lakh as bonus per annum. Now, there are 5 levels of ratings that will decide whether the pilots will get the bonus or not. It starts with outstanding, then exceeding expectations, meeting expectations, partially meeting expectations, and not meeting expectations. So pilots will have to at least achieve the third rating, which is meeting expectations. Now, additionally, pilots who underwent command upgrade and converger training from April 2023 to March 2024 and whose training was delayed due to justifiable organizational reasons will receive additional compensation for the time they spent in training and beyond the guaranteed 40 hours of flying. So yes, this is like a good news for pilots.
Good news for the pilots indeed. Madiha, thanks a lot for that update. Time for a short break. Again, up next, we get you cues from the commodities market. Stay tuned, back on the other side. Welcome back, and moving on to updates from the West Asia conflict. The International Court of Justice is set to rule on South Africa's request to order a halt to Israel's offensive in Rafah. Meanwhile, an Israeli spokesperson responded saying that Israel will not be deterred from pursuing its war on Hamas ahead of the ICJ decision. And as promised now, Manisha Gupta joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, thank you for that, Hormuz. Yet another day when we're looking at profit-taking continuing for commodities as a whole. I'll start with the crude oil prices, and it is a fourth day of decline. We are now trading at a 3-month lows, and the crude oil prices have declined between 3 to 4% on the lower side. Well, the prospects of higher for longer U.S. rates seems to be weighing on across markets. And for the crude, it also is about the U.S. inventories, which have seen a gain there. Markets are looking at the OPEC and allies meeting now on the 1st of June. And there also is an interesting report from UBS saying that the oil demand growth is expected at 1.5 million barrels per day in 2024. And they do believe that the crude oil prices will surge to $91 in coming months. So that's $10 away from where we are right now. So maybe we are near bottom when it comes to crude oil prices. It's the same case for metals also. Copper prices are now 6% off its all-time highs. Gold has continued to decline. That one is trading at a 2-week lows. Silver prices fell another percentage point in the overnight market. So this is still some correction that we are seeing across commodities.
Some correction continuing across commodities, and that reflected in some of the metal prices yesterday as well. Manisha, thanks a lot for that. Now, moving on to some weather updates from down south. 7 deaths have been reported from Kerala after heavy rains lashed the southern state. Kerala received heavier than normal pre-monsoon rainfall, while the rest of North and East India witnesses record high temperatures soaring above 50 degrees Celsius. The state government has warned citizens to remain cautious as the possibility of natural disasters like landslides, floods and mudslides are high. The Chief Minister's office reported that relief camps are in function in multiple districts in Kerala, with close to 223 people accommodated in them. Remember, the Met Department yesterday placed a red alert on 2 districts in Kerala and an orange alert in 8 across the state. IMD has also issued a warning for the fishermen, cautioning them of high tides, and predicted the rainfall to continue until the 24th of May. And that's all we have on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call sets you up for Friday morning straight. Stay tuned. Back on the other side.